Hello, and thanks for tuning in to yet another edition of Executive Corner Expert Talks. My name is Monica, and I welcome you all to this very special episode where we explore the interaction of innovation, technology, and finance as we dive into the exciting world of digital assets and cryptocurrency investments with a true pioneer in the field. Joining us is Deryck Graham, the founder and CEO of Portal Asset Management. It's a company that redefines how we approach the digital economy. With over 3 decades of experience in building and leading innovative companies, Deryck has been at the forefront of technological and financial advancements. From aerospace and pharmaceuticals to blockchain investments, his journey is nothing short of remarkable. In this conversation, Deryck will share his insights into Portal Asset Management's innovative strategies and how the company is shaping the future of digital currency investments and the evolving dynamics between traditional finance and cryptocurrencies. We'll also delve into key topics such as risk management, the influence of global political shifts, and how emerging technologies are reshaping the financial landscape. So, whether you are a seasoned investor or just stepping into the digital economy, this interview promises to provide valuable perspectives. Let's get started. Deryck, thank you for joining us. It's an honor to have you with us.
Oh, you're most welcome. Very generous introduction. Thank you very much, Monica.
Great. So, kick things off, I would like to ask you, can you tell us what brought you to the realm of crypto assets and how long have you been in this space?
So I've always been fascinated by technology, and back in 2017, I was developing a software program to transfer the provenance of assets. So when you see things like classic cars, who owns it, how it's been maintained, is its provenance. Someone during that development program said to me, why don't you stamp it on a blockchain? And in early February 2017, I said the famous words, what is a blockchain? And 6 weeks later, I was in Europe, and I traveled Europe for 5 weeks attending conference after conference, getting excited about the extraordinary things that a blockchain could create. This entire world that is capable of replacing all things that are double entry bookkeeping. And when you think about it, that's everything. And so that was what inspired me. And of course, those were the days when Bitcoin and Ethereum was out, and there was a very small number of tokens out in comparison to what there is now.
So, Deryck, Portal Asset Management advises two dynamic pathways for entering the digital assets market, the Portal Digital Fund and the Portal Radiance Multi-Strategy Fund. So, why did you establish these pathways and what is the logic behind these investment strategies?
Well, the period of 2017 and 2018 was the period of the ICOs, the initial coin offerings. And it was a cowboy world and extremely crazy, volatile, a lot of scams. And of course, by the way, typically in a development environment, some of the great tokens were created and launched around the worlds of decentralized finance, a name not even used at the time. I looked at it and said, it's important that people can have an opportunity to invest in this space, in a manner which is more as an institution could invest in it. So we developed what we call institutional grade funds that are based in typical areas for hedge funds, which is the Cayman Islands, run by highly competent, large fund management companies, and run to standards where risk is mitigated. And so it was basically this crazy volatile environment that caused us to create these institutional grade funds.
And given the inherent susceptibility of digital assets we're talking about, how do these funds manage risk while striving to deliver solid returns in such a rapidly changing market?
So the two funds have quite different investment profiles. So the Portal Digital Fund is a fund of funds, and it engages some of the best funds in this space. We reviewed 250 funds, narrowed it down to 25. We track 15 and we've deployed to 11. And what we do with that fund is we have around a third of the fund in what we call high volatility, long commitment funds. These are funds that are committing to early stage but still liquid tokens. And then we have about a third of the funds of what we call market neutral, high frequency trading, arbitrage, that sort of thing, returning a fairly consistent return each year. And then about a third of the funds we call sentiment and momentum. They're just chasing the marketplace. Well, you balance that out, and that gives you the opportunity to reduce your downside risk profile. So we look towards getting about 2/3 of the upside of the market and about 1/3 of the downside over a period of time. Our goal is to achieve an average of about 25 to 30% return per annum. And currently we're sitting at an average of about 27% per annum over our 5-year period. So fund number one. Fund number two, quite different. So Radiance has an edict that says you should own Bitcoin. And frankly, as you and I were talking just before the show, if you want to enter this space, it's Bitcoin. Because it's the digital gold that everyone relates to. It's the brand that heralds this area. It's a standalone token quite different to all others. So our view on this was not just that we acquire Bitcoin and hold it, say like Michael Saylor does at MicroStrategies, but that we acquire Bitcoin and we run consistent derivative algorithms on it so that every month we what we call extract or we earn Bitcoin. And so our goal is to earn 7% Bitcoin per month. So the goal there is simply build Bitcoin on a monthly basis. Its price goes up and down, but if you own more of it on a monthly basis, then you're going to be in a better position. So Radiance is a lot more volatile because its price will be exaggerated as the market goes up and down, but it gives you pretty solid exposure, or very solid exposure to Bitcoin. Two different personalities.
Sure. And we see, Deryck, how President Trump has heralded a plan to make the USA the center for cryptocurrency development and trading. Not just that, but now we also have a meme coin called Trump. So what plans has he outlined, and how do you foresee this impacting the industry and the important number goes up factor? Also, if you can tell us, how do the two funds plan to benefit from these changes in strategy?
So the first thing that the listening audience has to realize is that in the last probably 5 or 6 years, there's been a program in place called Choke Point 2.0, and it was being put into place by the previous administration. It was very active. A lot of people knew about it by virtue of the actions, but they didn't now, as they now know, that it was actually strategically managed. And that was the FIDC, which is the Federal Insurance Deposit Corporation, which is the high point of the banking groups in America, actively debanked crypto. And they pushed crypto out of America, and it started to go into Europe, Dubai, Singapore, etc. And there was a good reason, because crypto is a threat to the banking system, because it provides extraordinarily fast way of being able to transfer and remit value across the world. So by removing Choke Point 2.0, it gives the ability, of course, to see this whole world of crypto assets and cryptocurrencies expand. Trump has said more than that. He said that he's going to create a national Bitcoin reserve and buy up to 5% of Bitcoin and keep it in the reserve like gold. Now, the intriguing thing about this, Monica, is if he does that and he buys Bitcoin like gold, a couple of things are happen. The first time he announces it, the major institutions are likely to front run him. In other words, they'll be buying ahead of the reserve. And then other countries around the world who are already announcing that they will buy Bitcoin as a reserve will start buying too. Monica, there's only 21 million Bitcoin. That's it. So that means number goes up, because the demand will continue to grow as different nations say, we're going to allocate a small amount. And so if they allocate a small amount, that means 5% of Bitcoin will go to the treasury. That is the same amount held by all of the Bitcoin ETFs. There are 34 of them worldwide that goes there. So that means 10% of the market of Bitcoin is locked up and put away, although the ETFs, of course, are traded, but are locked into those ownerships. I think that's a very big thing. And of course, the other thing is that he's appointed a council to actually promote digital assets. He's put Paul Atkins in charge of the SEC and removed Gary Gensler. and he's put in Caroline Fame, who's the Futures Commission, the Commodity and Futures Trading Commission. This is all of a sudden like saying that this poor cousin that's been performing exceptionally well is now allowed back into the family or into the family, and the financial community is now acknowledging its importance. It's a big step.
Sure. So, as a leader in digital asset management, what is the most important piece of advice you would offer to traditional investors, the ones that like to invest in ETFs, stocks, and maybe real estate, looking to explore the world of cryptocurrencies?
Well, the first thing I'd suggest is buy Bitcoin, and a fairly simple position on that, and that is that it's an easy token to acquire. People understand it. It's digital gold, but importantly, they need to learn. They need to educate themselves. They need to read about it. They need to understand where it is. I mean, by example, we developed a book called The ABC of Blockchain. It can be found on our website. It's a way of understanding how blockchain works, how decentralized finance works, how Web 3.0 works. It's not too daunting. In fact, it's extraordinarily exciting. But sometimes the challenge of very big financiers or people that have been in the finance industry for a very long period of time is the process of unlearning, because this technology works differently to banks, institutions, and governments. And so if you go through a little bit of unlearning and you understand it, possibly you might get as excited as I did back in 2017.
Wow, absolutely, Deryck. And with all the technological advancements happening, like the blockchain, we are talking about AI, what are some key trends in the digital asset space that investors should be watching closely in 2025 and beyond?
So firstly, one has to understand that the blockchain is a stack of technologies. And the blockchain is mere but the foundation. It's like the plumbings of the building. It is the accounting system that runs what sits above it. Tokens such as Ethereum enable the development of decentralized finance products and trading products, etc. DeFi is the banking system. Web 3.0 is just the next generation of the web. It's what we call read, write, and own. And so what we see coming forward is the combination of these technologies with artificial intelligence and Internet of Things devices. So Internet of Things, on, off, hot, cold, yes, no, etc. out there in the world, and artificial intelligence trading on it. The trend I see coming forward is AI utilizing decentralized finance products and trading. I know that sounds like a bit of a mind blow for many people, but there are already tokens that have been released that have AI technology that trades and generates return. And so I see that as a big trend. Laugh as we may, this trend of meme tokens has brought a great deal of people into this space. And one has to realize it's simply, the price is simply the fact that there is attention given to tokens and you pay for that attention. What Trump has done with releasing the Trump token is that he's generated something worth gross, fully diluted value of about 36 billion. It's current trading at about 7.8 billion. And he released that just before he became president. Just after he became president, the same companies that released that, which he's the prime owner of, bought $47 million worth of Bitcoin, wrapped Bitcoin as they call it. And so what we see there, forget the moral aspect of whether a president should be profiting from a position on that, we live in a different world now, but what we see there is a president turning around and saying, a large proportion of my wealth is now in digital assets. Monica, do you think he's going to be anything but friendly to digital assets?
Oh God, wow. So Deryck, this is really fascinating. I really have to then, ask you to highlight, where do you see portal asset management in the next 5 years, maybe 10 years? And how do you envision your company and investors benefiting from the future of digital assets we are talking about?
Yes. So firstly, each one of these years are like dog years in this space. They're like 9 years in the normal realm. To suggest that we know what's going to happen in 10 years' time is absurd. No one does. Look how quickly it's grown and how different it is. So portal asset management, its prime role through its 2 different funds that it advises and has founded, Firstly, is to generate relatively stable returns around that 25 to 30% mark for the Portal Digital Fund, so that people are able to be exposed to the space like exposure to technology sectors. But in regards to Radiance, that's about accumulating Bitcoin. And our view of Bitcoin is that with the very large sovereign trusts coming into place, the national reserves coming into place, that Bitcoin has a solid chance of being $1 million token by 2030. An absurd thing to say a year or so ago, but now with the sovereign nations looking at investing in this, it just makes logical sense. So if we can build Bitcoin, and Bitcoin goes from 100,000 to $1 million, that's our goal. Continue to build Bitcoin. Bitcoin will always be digital gold. I don't think it's going to fall from that throne. Over the next 5 years, we're going to see technology appear and be utilized in blockchain in a manner that we've never seen before, at a rate that is an amazing rate of speed and extraordinary development of technology powered by AI and transacted on blockchains.
Sure. That brings us to the conclusion of our interview today. And Deryck, I must say this was quite insightful, right? And we sincerely thank you for your time and the comprehensive answers you have provided. But just before I let you go, any final thoughts, any message for our audience, Deryck?
Yes, I think the important message, Monica, is learn, educate, get yourself up to speed. As I said, by all means, you can go to portal.am, download the ABC of Blockchain document, very simple document, great way of understanding this space, or sit down, interrogate ChatGPT, learn there. But if you're entering the space, generally it's buy a Bitcoin and then start to understand what altcoins are, which is the alternative to Bitcoin, because they are the corporate tokens of what this industry will generate in the future. It's an amazing space. I said the final thing I'd say is, avoid it at your own risk.
Sure. That's Deryck Graham, the CEO of Portal Asset Management. In case you have missed any bit of this interview, you can certainly catch the full interview on our YouTube channel at Calkine Media and hear what he has to say about digital currencies. Do like, share, and subscribe. This is Monica signing off now.